you have a situation where you have a trend line, right? Okay, your trend line is slanting downwards, but now the issue with that particular trend line is that now it doesn't look too good, right? You don't feel like you've placed it correctly at the highest swing point, right? So at the highest swing point that you can see, and let's say this was the lowest point that we see over here. Okay, so let's just ignore all of this price action here, and this was the lowest point. Now, what usually happens, right? We want to see a lot of touches. Okay, now the one way you can do that is you can either adjust your trend line to sort of like retrofit into the actual price action, because sometimes if you see I just tipped it a little bit and you have more touches now on that trend line as previously did with just that 1-2 hit. Okay, there's one, right? There's two. You can press this down just a bit, and there's three. Okay, there's four, and there's a bit of a break on the upside. Okay, and then the price moved back in. Okay, if we go on through to the higher time frame, that is one of the easier methods by which we can sort of adjust the trend line. Now you can see if we're going on to the higher time frame, which in this instance is the, excuse me guys, I'm actually doing this webinar from my place, so excuse the noise. I'm not allowed to go to the office so because of this whole coronavirus thing, so I do apologize for the background noise. But as you can see now, it looks a whole lot better if you're looking at it on a weekly time frame as opposed to you looking at it on the daily time frame, right? Because you can see that there's some closes above that trend line, right? Typically, we don't want to see a close around above the trend line or below a trend line, and then that simply means that that trend, all right. So if the trend was downward, it simply means that the trend has been broken, and we can see a potential upward move. Okay, now we can just copy this trend this trend line over here to sort of like form a trend channel. Okay, now if we go on through to our weekly, okay, the next higher time frame from the one we're analyzing from, you can see that the touches look much more cleaner. We have there, boom, 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 and the market tagged there and came back nicely. But if you go on through to the daily, right? So if you go on through to the daily, this will look, okay, let me just fix this. Right, this will look like the market closed below right there. Okay, see price closed below. So if we highlight that area, there was a close below the trend line, which typically means that the trend is broken, right? It's sort of like support and resistance. So it just means that the trend is broken. But now if you're looking at the weekly, okay, the market rejected quite nicely, right? So that is one of the variations you can use to make sure that your trend line is intact. Just use, let's say, the next highest time frame for you to do your analysis, and that should help you to sort of like get a better idea or better understanding about where you are, right, in terms of the overall general direction of the trend. But looking at the next available higher time frame is always advisable in any case, right? Because you sort of like want to get the big picture view of what's going on. So let's say you're trading now a strategy that involves you taking trades at the bounce of this moving average, for example. Okay. So at the bounce of this, or rather trend line, okay, so at the high of this trend line, okay, now what you then do, right, is to properly plot your trend line, right, consistently try to practice that aspect of your trading, and then learn to identify when the trend line actually has been broken, okay? Because if you are looking at a trend line on a weekly or a monthly chart, okay, if you're trading on a weekly or monthly chart, that typically means so, okay, Seems like I lost you guys there for a moment. So now when you're looking at the chart as it is, right, that looks a whole lot better than how we initially had it on that daily time frame, okay, where the rules, because the rules do say you're supposed to take it from that highest candle, from the highest point, and then try to slant it down a bit. But you can see if we just follow the rules as is in that particular example, I mean, the trend line wouldn't have, we will probably missed out on a lot of opportunities. Let's just say so. Okay, let's say we just would have missed out on a lot of opportunities because, as much as we like to think so, when it comes to trading itself, right? When it comes to trading generally, it's more of an art than a science. Okay, sort of like picking support and resistance, right? So where your support level is going to be. I might give two people the exact same chart, right? And same time frame, right? And same amount of time to do analysis on the chart, and they'll come up with different sort of like outcomes, right? Or just with different levels, all right? They'll say, okay, support structure on the GBP JPY that I see as a significant one is at 127.63, and another one might say is at 125.93. Okay, so it could be something along these lines. You have a support there, boom, and someone might identify that as a support. Okay, so typically, when it comes to trading is not an exact science, right? So that's something that you sort of like have to wrap your head around. Okay, I like to say that there's no right or wrong way to do things, because with the one-on-one sessions, I teach 2 or 3 different strategies, right? And whichever one works best for that particular person, we sort of like move with that particular strategy. Right? So it gives me time to sort of like isolate what's the best form or what's the best method for that particular person. And it sort of like compresses the time that it would take for you to learn whatever strategy. Plus, obviously, it's a strategy that I've developed. So it's much easier for me to sort of like give off the information to someone. So when you're looking at a trend line, that is how you can use it. So depending on what strategy that you are using, right, I would advise, especially if you are new to the business, to sort of like look into trend lines, right? Even if you don't particularly use them for entries or use them for exits, whatever that may be, just use them to get a general idea of where the market is going. Okay, just use them to say, all right, I can see that there's a trend channel heading downwards. Right, the market is staying within this trend channel, because it's very simple, or it's very easy to spot it when the trend line has been broken and the trend line has rejected a certain price. Okay, like I've mentioned before, a trend line is not something that I use. Okay, but it's something that I know how to use, and if applied properly, because I've used it in the past. Okay, but it's just that I've found things that are much more effective. But when you're starting off, you sort of like have to have this starting point. So definitely you can look into trend lines, and there's people who are, and there's a lot of people, I'm guessing, who do use trend lines as a methodology to find trading opportunities. So I definitely would advise that. So that would be basically how you'd structure your trend line. Like with everything else, when it comes to your trading as well, right? You don't have to make things retrofit 100%, because you're going to have a lot of difficulty trading if every single thing has to be to the pip and all that other stuff. Okay, sometimes you might miss a pip or 2, right? Or 3, or even 5. Okay, but your trading rules are sort of like guidelines. They're not like strict set rules where you have to walk on this line, for example. Obviously, you might walk on the line, right, most of the time, Okay, but every now and then you're going to go like this, right? You go to the left a bit, but your trading rules are just there to keep you close to the line, because you don't need to be exactly on the line for you to consistently make a profit. Just so long as that you are sort of like moving in between the line most of the time. Okay. So likewise, right? So the higher part, or the trend line on the upper level, would be sort of like your resistance. Okay. So when the market is trending down, it's going to slant to the downside. Okay. And when the market is trending upwards, okay, it's going to slant to the upside. Right. So that is our resistance. Likewise, with the support, when the market is trending down, it's going to slant to the downside, like we see over here. Right. And likewise, if the market is moving higher, then we're going to see it move a bit slant to the upside, like so. Okay, so let me just grab this one, right, instead of drawing a new one, and sort of like give that example. You can see this. Okay. Okay, boom. So you can see that you're constantly sort of like adjusting where your trend line actually is, because you want to see as many touches as human. Hey, can you guys hear me? Okay, apologies, guys. Okay. So basically, it's going to be easy, as I said, to spot when the trend has been broken. Okay, you can see prior to this downward slope, there was an upward slope where the swing lows were going higher and higher. If you enjoy the content, like, subscribe, and also share the video. It just helps to keep the channel going, and I hope you enjoy. Cheers.